Hello, so it's a beautiful evening here in Palm Springs. Hello and welcome to Money Markets and More with me, Dominic Frisby. Today we're talking about gold. Is it going to $3,000? Because that's what a certain chart pattern is saying. If you're looking to buy gold, by the way, in these uncertain times, let me recommend the Pure Gold Company, with whom I have an affiliation deal, and I'll put a link to them in the comments. So, gold's technicals. What is gold doing? Where's it going next? This is one of the most bullish charts I have seen in 48 years of trading, veteran speculator Peter Brand recently said, and he was describing the setup in gold. Bitcoin's going up, why not gold? How long must we wait for this inevitable move? Well, the charts are looking promising. So I'm going to start with a chart of gold in sterling. Now, many of you who watch this channel are based in the UK, and you will have bought your gold with sterling. And if you ever decide to sell, it is sterling you will receive in exchange. So that's why you look at gold in sterling. Now, sterling may be the oldest currency in the world still in use. General wisdom has it that it dates back to Offa, who was king of Mercia in the 8th century. But really, pounds and pennies owe their provenance to the Romans, their libri and their denarii. But old or not, the pound has been shockingly mismanaged during my time playing about with the mortal coil, and especially so over the last 25 years. Just this decade, the pound has lost a third of its purchasing power. That's according to Truflation. A third of its purchasing power since 2020. And if people really understood the extent to which incompetent management is stealing from the players, we might actually get the revolution we so desperately need in this country. But in any case, gold is the constant. It's been around since before the planets were formed, and it has not changed. And in 1999, when Gordon Brown sold our gold, the price was $150 an ounce. Today, it's over $15,000 an ounce. So measured in the constant that is gold, that is a loss of purchasing power of 90% this century. I think it's scandalous. And in a nation that's been so badly betrayed by its leadership, this must be one of the greatest betrayals of all. It's weakened everyone. In any case, here's gold in sterling over the last decade, and you can see what a good hedge against government gold has been. Last month, the price briefly broke out to new highs before pulling back. This is a secular bull market, a long-term uptrend, and there's no reason for it to end anytime soon. You might argue that it's just made a double top, and that's going to slow things down in the intermediate term. That's possible, but such is my distrust of those managing the currency. I am not worried. I have a lot more faith in gold. It's considerably more reliable than those that run the Bank of England and the Conservative Party. By the way, my lecture on gold, my lecture with funny bits, that's coming back to the Museum of Comedy in February. 2 dates in February, February 14th and the 15th. It's a really fun show. You'll like it. Please come. And I'll put a link where you can get tickets in the description. So turning now to gold in US dollars, which is kind of how everyone thinks about gold. And here we see gold against the dollar over the last 20 years. And you can see the massive run-up over the noughties, the bear market of 2011 to 2016, another good run-up from 2018 into 2020, followed by the sideways range trading action of the last 3 years. There is also something of a triple top just below 2,100, which we'll come back to in a moment. Now, the reason I showed you that long-term chart is that it has traced out a massive multi-year cup and handle pattern, which I've superimposed here. Now, the cup and handle is a bullish chart formation, particularly in an uptrend, as is the case here. And to establish a target, you would take the distance between the bottom of the cup, which is 1,050, give or take, and the pattern's breakout level, which would be 2,090. And then you would extend that distance up from the breakout. So the distance is 1,040, so we can project a target of 3,130. Nice. Now, cup and handles are seen as a reliable pattern. One trader argues that it's 95% reliable. I wouldn't rely on it to that extent, just see it as one indicator in a much bigger arsenal. I should also say that this cup and handle has been about for a long time. I was talking about it in July 2020. If it goes on much longer, the handle's going to be bigger than the cup. But the pattern is still intact. So, Peter Brand likes gold because he says it is forming an engulfing, sweeping reversal month. And this is the chart he presented on Twitter, X, whatever you call it, Zitter, to illustrate his argument. Now, I've never been a great one for engulfing patterns, I have to say. I've never quite understood them, but I am a great one for Peter Brand, and he's a much better trader than I will ever be. Of some concern, however, is this triple top that gold's put in around 2080, and it's visible in that chart above in Peter's chart. It's not a good omen. Brand, by the way, also sees gold going above $3,000, though he feels we may likely see a washout move to 1700 first. That would give the chart symmetry, he says, and properly prepare gold for a run to 3,000 and higher. So let's talk about the recent price action. It's been quite something. We've been declining since May's high of 2085. Then in September, gold plunged. It lost almost $150 in barely 3 weeks. Touched 1820, massively oversold, suddenly reversed, and it rallied $200 to a point where it was massively overbought. It's now pulled back, and it's sitting around 1940. The short-term trend, that's the blue line in this chart, is lower. The intermediate-term trend, sideways. And the long-term trend, the one-year moving average, is rising. And what I like about the moving averages generally is that they're starting to converge and compress, which often presages a strong move. And I'm thinking that 1900, 1920 might be a good entry point. All in all, I'm glad I own the gold that I own. I'm a happy holder. I see no reason to sell. As for taking a massively leveraged bet that the price is going to rise a lot higher, I don't quite have the appetite for that either. And like I said before, if you're buying gold, my recommended bullion dealer is the Pure Gold Company, whether you're taking delivery or storing online. Premiums are low, quality of service is high, and I'll put a link. And they deliver to the UK, the US, Canada, Europe, or you can store your gold with them, and I'll put a link to them in the comments below. And one more thing, don't forget my lecture with funny bits about the amazing lecture, metal that is gold, that's coming back to London, February the 14th, 15th, Museum of Comedy. I'll also put a link to that in the description. It's a fun show, please come. Thanks very much for watching. I'll be back with another podcast very soon. Until then, goodbye.